Assalamualaikum guys. We come to part 3 of our analysis on the Islamic debt financing. Earlier I was trying to differentiate between good debt and bad debt from the banking angle. We are trying to see the type of debt created from asset funded by deposits and the types of debt created by asset funded by the investment account. And my thinking was that the asset created or the asset funded by investment account created good debt, while the asset funded by deposit fund creates an inferior debt or bad debt. That is to my own interpretation and thinking. My methodology is based on the consequences of the debt created from asset funded by deposits and asset funded by investment account. So that is my position, which is entirely scientific. The one that is quite interesting too is the good debt versus bad debt coming from the consumer's perspective. So meaning that we want to see whether the debt that the consumer owe the bank is a good debt or a bad debt, because the consumer they essentially take a loan or they take a murabaha from which a debt obligation is created, and the amount of debts that the consumer owe the bank are much higher than the amount of loan or the amount of facility that the consumer have consumed. So let us make sure that the amount of payment, the total payment of debt, which is higher than the loan or higher than the murabaha, is well spent. As I said earlier, if the consumer took a murabaha of 100,000, then they will end up paying 150,000 in total, which is the total debt comprising of the facility amount plus the profit margin. Or in conventional banking, it is the loan amount plus the interest payment, right? So a good debt will be a debt well spent, while a bad debt is a debt not well spent in terms of the criteria that we will be looking at today. And then we will try it and see to what extent an Islamic bank in Malaysia is able to evidence that scenarios of good debt and bad debt that has taken place in the asset portfolio of that particular bank. Now, as you see here on your right side, good debt and bad debt. Good debts are those spent on homes, on education, business ownership, and investment, because all of this spending, the borrower or the consumer will make use of the liquidity to purchase the house, to spend on education and to invest in their business operation, and also to invest in stocks and bonds. And over time you will see that the value of this asset will go up, and therefore the debt that we pay the bank is well spent, because at the end of the day, the value of the asset has increased. But when we look at a bad debt, that is debt spent on car loan, on credit cards, on store credit, so that is buy now pay later, cash advance, easy pay loans, and financing. These are all spending on asset that will decline in value over time. So some of these assets will become worthless over the years, but then we have spent so much money on them, but at the end of the day, they carry no value. So that is why we call it bad debt, right? Car loan, we spend on a car, but just a year after that, the asset the car will depreciate by 20%. Credit card and store card, we spend our money on useless things, for pleasure, for show, and not for needs, but only for wants. So that we owe the bank, to purchase this so-called, luxurious and pleasure or lifestyle seeking goods, may be good in a very short term, but in a longer term, it will turn out to be a bad deal. And thus, we would like to see at the banking level, for example, for Maybank Islamic, we can see that this bad debt, for example, the car loan, credit cards, and the other personal loan, we can see that for car financing, it constitute about 23% of the total asset of 219 billion, and credit card and personal financing take up about 2.2%. So the total bad debt is about 25.2%. So the bad debt, meaning that the debt that the consumer owe the bank, is around 25.2%, and then the remaining balance are all good debts. We got the purchase of securities, purchase of landed property, purchase of fixed asset, and working capital 45 billion, purchase of landed property 71.8 billion, purchase of securities 24.9 billion. So in other words, that the spending pattern in the Islamic Bank has been good, and I think in a sense that the spending have a good impact on the economy. So to some extent, this is a good observation, and we do hope that that overall the spending habits of the consumer from the loan or from the tawarruk they take from the banks, is worth it. But at the same time, we need to control, the issuance of credit card, store credit, and easy loan, because these are, product where the interest rate is so high that many of the consumer may end up defaulting their debt obligation, right? So if things are under control, it is okay, but we do hope that the consumer are much more, experienced and wise enough to avoid the consumption of bad debts. Okay, guys, thank you very much for your time. I'll see you again. Assalamualaikum warahmatullahi.